We saw a down day on Friday. We're seeing the futures under quite a bit of pressure this morning. What's giving you confidence that this rally is going to continue? Earlier in the show, we mentioned that Apollo put out a note saying that the Fed is the driver of this rally, and as it gets more hawkish, we could see a big downturn in stocks.
No, that's a great point, Frank, and certainly we're going to have some apprehension, but we're going into quarter end. There's only 9 trading days left in Q2, so I think you're going to see some underinvested money managers. You're going to see some chasing, but when you really look at the marketplace, it's moved so much higher. The NASDAQ 100 up 8 weeks in a row, so yes, you can argue that it's overbought, but at the end of the day, there's a lot of cash sitting on the sidelines. The VIX is under 15, so I think this week is going to be fascinating because last week we did see a little more hawkish Fed despite the fact that they pressed pause on their historic rate hiking campaign, and they try to insinuate that they're going to have 2 more quarter basis point rate hikes without the end of the year, and no one believed it. Look at the 10-year note back under 3.8%. So I think there's a credibility issue, but I also think the market is walking away from rate cuts at the end of the year, but I think the pause is here to stick. That is going to provide some investor confidence, and at the quarter end, you're going to see some window dressing come into the market.
So, Jeff, with all this bullish sentiment, what is your WEX word of the day?
My WEX word of the day is chase. And I think you're going to see investors as well as traders chase this performance into the end of Q2. And yes, it does feel a little extended, a little frothy up here. I know we have some selling pressure. We had some profit taking last Friday. But at the end of the day, Frank, we're out of our range. We were tethered to 4,000, the S&P 500. We are in the midst of a breakout. The market is moving higher. It did achieve 44.50, but there's more room to run. It's not going to be a straight line, Frank.
Okay.
I'm not the ultimate bull, but we are going to see markets move higher.
All right, so are you chasing a little bit? I want to talk to you about your pick, which is Intel. Intel had some news today, spending $33 billion to develop 2 chip factories in Germany. I'm looking at the stock. It's up 20% over the last month. Some of that just over this AI fever that's hitting chips and everything else. Why is that your pick right now after this huge run-up?
Well, I think the AI undercurrent is certainly important. Intel has been a forgotten about stock. When you talk about the giant cap, the resurgence of giant cap, you look at some of the other names, specifically NVIDIA has been just a darling of a stock. But when you look at Intel, it almost became like a takeover target. When it went under $30, NVIDIA, after that last earnings, or that pop of 25%, they could have actually just bought $100 billion small little company Intel, despite the fact they were the world's largest chip maker for quite some time. So I think Intel is a really fascinating name. We're also looking at FedEx today. I think FedEx is also fascinating because it's really taken UPS to the woodshed on a year-to-date perspective. But if you look a little bit longer, Frank, both the UPS and FedEx on a 3-year perspective are about neck and neck. But we want to own FedEx. We believe that's more of an essential company moving forward. But we're going to be waiting for those earnings after the market closes.
Yeah, a lot of eyes on FedEx. I want to point out one thing. Forward PE of Intel, 120 times forward earnings. That's not too expensive?
It's not too expensive. It's interesting. When we talk about P ratios, we talk about percentages. The trader in me, which we really have to embrace, Frank, is price. Look at the price of Intel, where it was just three to 5 years ago. Okay. So I think that really puts a little bit of wind in the sail because I think people focus too much on percentage, not enough on price.